domestic economic activity continues to be resilient. On the supply side, steady progress in southwest monsoon, higher cumulative kharif sowing, and improving reservoir levels augur very well for the kharif output. The likelihood of La Nina conditions developing during the second half of the monsoon season is likely to have a bearing on agricultural production in the current financial year. Manufacturing activity continues to gain ground on the back of improving domestic demand. The index of industrial production, that is IIP, growth accelerated in May this year. Purchasing Managers Index, that is PMI, for manufacturing at 58.1 in July remained elevated. Services sector maintained buoyancy as evidenced by the available high-frequency indicators. Similarly, PMI services stood strong at 60.3 in July and is above 60 for 7 consecutive months, indicating robust expansion of services. On the demand side, household consumption is supporting a turnaround in rural demand and steady discretionary spending in urban areas. Fixed investment activity remained buoyant amid government's continued thrust on capex and other policy support from the government. Private corporate investment is gaining steam on the back of expansion in bank credit. Merchandise exports expanded in June, although at a slower pace. Expansion in non-oil, non-gold imports accelerated, reflecting resilience in domestic demand. Services exports recorded double-digit growth in May this year before moderating in June. Looking ahead, improved agricultural activity brightens the prospects of rural consumption, while sustained buoyancy in services activity is expected to support urban consumption. The healthy balance sheets of banks and corporates, thrust on capex by the government, and visible signs of pickup in private investment would drive investment activity in the current year. Improving prospects of global trade are expected to aid external demand. The spillovers from protracted geopolitical tensions, volatility in international financial markets, and geoeconomic fragmentation, however, pose risks on the downside. Taking all these factors into consideration, real GDP growth for 2024-25, that is for the current year, is projected at 7.2%, with Q1 at 7.1%, Q2 at 7.2%, Q3 at 7.3%, and Q4 at 7.2%. Real GDP growth for Q1 25-26, and this is something which we are giving for the first time. Real GDP growth for Q1 of next financial year, that is 2025-26, is projected at 7.2%. The risks are evenly balanced.